You will get to know the 7 assets that are making people rich. If you invest here, you will get rich too. So watch this video till the end. Now let's start. Number 1. Equities or stocks. Stocks play a crucial role in a traditional portfolio allocation, often represented as the 60 in a 60-40 strategy. They are widely accessible to investors and offer significant potential for income generation. The truth is, there has never been a more effective vehicle for generating wealth or income than the stock market. Two significant advantages of investing in stocks are the flexibility it offers and the liquidity it provides. Selecting stocks can be a valuable skill, yet it often involves a significant learning curve. Investing in index funds, such as the S&P 500, represents a dependable strategy that minimizes uncertainty. While some individuals lean towards real estate, I find that the liquidity of equities offers a more adaptable choice, allowing for quick sales when necessary. Number 2. Exchange-traded funds. Index funds represent a stock-adjacent asset that merits your attention. Let's explore this in greater detail. Exchange-traded funds, commonly referred to as ETFs, represent collections of stocks grouped under a single ticker symbol. Typically, they focus on a specific theme or follow a designated index. For example, consider allocating funds to an ETF such as the Vanguard Total Stock Market ETF, VTI, which is designed to track the overall stock market performance. Alternatively, you might consider a more specialized option such as the VanEck Gold Miners ETF, GDX, which targets investments in gold, or the iShares Exponential Technologies ETF, XT, which emphasizes international stocks that are at the forefront of exponential technological advancements with the potential to greatly impact their respective industries. Alternatively, you might consider a more conservative approach by investing in the 2 index fund ETFs favored by renowned investor Warren Buffett, the SPDR S&P 500 ETF Trust, SPY, and the Vanguard S&P 500 ETF, VO. These options provide you with exposure to all the companies in the S&P 500 through a single ticker. The S&P 500 has delivered an average yearly return on investment of 11.14% since 1950. To provide some context, an investment of $1,000 in the S&P 500 in 1999 would grow to nearly $7,000 by 2024. The rate of return appears to be quite favorable. ETFs, similar to stocks, offer liquidity and are easily accessible to investors, while also featuring lower fees compared to actively managed funds such as mutual funds. The cost structure of ETFs is one of their most appealing features. Since ETFs track indexes, they eliminate the necessity for a large team of highly compensated professionals, ensuring that a minimal portion of your investment is allocated to management costs. Subscribe to our channel and also press the like button if you want to know more assets that make people rich. Number 3. Fixed income securities. Bonds must be included here, as they are frequently regarded as the counterpart to stocks. A bond is a fixed income instrument that represents a loan made by an investor to a borrower, typically corporate or governmental. It involves the borrower issuing a bond to raise funds, promising to pay back the principal amount on a specified date, along with periodic interest payments. To put it plainly, a promise to repay a debt. A bond represents a loan that you extend to an entity, such as a corporation or government. In exchange for the loan you provide, they will repay you with interest over a predetermined time frame. If a company is considering the construction of its new headquarters but lacks the necessary funds to proceed immediately, it may need to explore alternative financing options. Issuing bonds could be a strategic move to generate the necessary funds for the project. In exchange for this funding, you will ultimately need to repay the amount along with interest. In exchange, you receive consistent interest payments and a commitment to return your original investment upon the bond's maturity. Various categories of bonds exist, including government, corporate, and municipal, along with numerous investment strategies available for each type. For those interested in a straightforward approach to bond investing, Public's high-yield bond account may be a suitable option to explore. Number 4. Property investment. Real estate represents a significant alternative asset class in the market. Allow me to explain the rationale behind this. There is a consistent demand for it. Individuals require frameworks for protection and security. It is essential for individuals to have access to housing, and businesses require it as well. There are numerous strategies available for investing in real estate. One potential strategy is to consider flipping houses. Alternatively, you might consider purchasing an investment property to generate rental income. However, it's important to acknowledge that those strategies necessitate significant initial investment and considerable effort. Having spent several years in the role of a landlord, I can confirm that this lifestyle may not suit everyone. If you're interested in the potential of real estate investment without the responsibilities of direct ownership, there are alternative options available to consider. One option to consider is investing in REITs. Real estate investment trusts, commonly referred to as REITs, are entities that engage in the ownership, operation, or financing of income-generating real estate properties. They offer opportunities to engage with substantial, revenue-generating real estate without the necessity of direct property investment. Number 5. Private credit. Private credit represents a valuable income-generating asset that often goes unnoticed by many individuals. That may be due to the fact that, until recently, access to private credit investments was largely limited to a select group of individuals, typically those with significant wealth or extensive networks. A platform has emerged that allows accredited investors to engage in private credit investing with a minimum investment of just $500. This option provides you with access to a diverse range of debt and blended note portfolios. The organization collaborates with reputable corporate borrowers, a significant number of whom provide loans to small businesses and individual consumers. Then, those syndicated borrowing are funded by you, the investor. You just sign up, pick an exclusive credit deal you like, and invest. Eliminating fees for individual transactions makes this an excellent opportunity for diversifying into private credit investments. The performance metrics are quite compelling. As of May 2024, Percent has surpassed $1 billion in funding, achieved a 13.66% weighted average APY, and maintains a notably low default rate of 2.52%, especially when contrasted with the 2.62% default rate seen at commercial banks. Number 6. Art and collectibles. Consider stepping into art plus rare items. A 5% allocation to art has been demonstrated to improve the profitability of a portfolio. Incorporating a modest 5% placement to contemporary art has the potential to enhance your long-term performance in 98% of cases, as indicated by recent research from Masterworks. Their art investing platform divides paintings into shares, with a collection nearing $1 billion. Investing in art through Masterworks is accessible to everyone, regardless of your background in art history. Number 7. Enterprises. Businesses represent valuable income-generating assets in the market. Fortunately, there are ways to tap into their income-generating potential without the need to start a new business. In my opinion, One of the most promising opportunities for investing in businesses is to access pre-IPO companies via a platform such as Hive. Hive presents a promising opportunity for accredited investors to access private companies such as Grok, Tikian, and Waymo. The platform facilitates connections between accredited investors and a multitude of high-growth, venture capital-backed startups. Watch the video appearing on the left side to know the tips on how to get rich in 2025. We have discussed methods of connecting with rich individuals, managing finances accurately in that video, so do check out. Also, subscribe to our channel to know more tips on personal finance.